The big story we're watching today, especially here in APAC, but everyone around the world, is India. How much of a knock-on effect could this have globally? How closely are you watching?
Yeah, obviously we're watching it closely, and the events are, of course, the sad events are a cause for concern. But I do have to say that the spread of cases are not as widespread across regions as they were before. And if we were to take a step back and look at some of the fundamental factors, not an awful lot has actually changed. We are still getting a reasonable rollout of vaccines in the US, the UK, Europe has stepped up. The growth indicators in the largest economies, China and the US, are absolutely looking very good at the moment. Inflation's picking up, but not at a worrying pace. And I think this is all good for those corporate earnings that we're going to be looking at this week. What I do have to say that has changed, of course, is that valuations are looking a little bit more stretched. Investor positioning has got a little bit more aggressive. So we are more susceptible to a bit of a pullback in equities off the back of bad news. But I would say actually that could be an opportunity to get in on better terms, because there's enough monetary and fiscal stimulus in the global economy that we think equities do okay over the next 12 months.
I think you bring up a strong point there. Is there a waning appetite for risk at the moment? We saw Bitcoin, for example, selling off rapidly over the weekend. Are people going to be piling into somewhere else?
Waning appetite, if anything, actually, some of the signs are that appetite is becoming stronger, and potentially maybe investors a little bit more complacent. A week ago, we saw the VIX actually break through that important 20 mark before a pause for breath last week. And I think there were some technical factors for that. And I think the backup in bond yields allowing investors to diversify into more defensive assets and not have to rely on hedging equity risk through options was an important factor there. So I think actually what happens next is going to be important for telling us more about risk appetite. If we continue to see a fall in equity volatility and things like the VIX index, maybe also things like the credit spreads, that could be suggesting that investors' appetite is actually becoming maybe a little bit exuberant. And as I said before, that leaves us more susceptible to a slowdown on bad news.